All right, hey there. Welcome, everybody. It is a few minutes after 11 a.m. Central Standard Time here on Friday, the 7th of May, 2021, here in beautiful Boerne, Texas, just north of San Antonio. Great place to live and visit and work. So if you guys ever get a chance, of course, you jump on down this way. I'm Christopher Franks. I'm with Texas West Capital, and man, we have got some stuff to talk about today, right? Oh, man, you know, NFP, the jobs report today came in what appears to be a pretty bad, much lower. I mean, I think the calls were for around something like 900,000 increase in jobs. They only got like 200 or 275,000, so significantly lower. But we'll talk about some possibilities on why that may be and why that actually may not be, kind of what we're looking at the moment here. So we'll talk about that. Bitcoin still doing Bitcoin, just doing sideways. Ethereum trying to push higher. Litecoin, man, I got into Litecoin just a little bit early. I got out of that Ethereum long, locked in those profits, got into Litecoin a few days back, and just kind of doing this sideways thing. It happens sometimes. So we'll see how that goes there. Man, oh man, who's here already? Let's see, Hank's here, Crypto Mowgli, Chris Day, what's up, man? Bianca checking in. Data's here as well, LXT. Who else is here? Ari's here, what's up, man? Yo. Wind Beneath Wings is here. Let's see, Brian Kelly's here. Thomas Payne says, just here for the spin, since Joe Biden and the Dems cannot do any wrong. All right? Oh, man. And I think Biden's supposed to be speaking right about now, isn't he? So I apologize for taking you away from that. Who else is here? Mr. No-Go, what's going on? Ross Mark, hey, good to see you, buddy. Brent Wolfson checking in. Nevlusian, Jeff D. Telluride, what's going on, guys? Hey, listen. So you can join us here at howtotradetowin.com. Man, we'd absolutely love to have you guys here. You know, again, I can sit here and tell you all day how much content we put out. I can tell you, all day that it's really great stuff. The education's top notch, and you're going to get more of everything than you're going to get anywhere else for a lower price. But, again, that's just me saying it. So I try to remember when I get a chance to post comments that, I get from members. Just so that way you guys have you hear what's going on from other people who are actually there. Because you're going to get people online, they're going to say, oh, this person, or that company is this way and that way. But then when you look at what pretty much everybody else is saying, it's not the same thing, right? And so, it behooves you to do a little research and look into it, and I try to help you out with that to give you the other side of the story that they'll try and convince you isn't correct. But we'd love to have you here anyway. I've updated, all the what the different levels get. By the way, if you're Tier 3 now, you're going to get, every Wednesday we do the tips, tricks, and techniques live stream for Tier 3. Every Thursday we're doing Elliott Wave live stream for Tier 3. And then starting in about, I think probably in the next week or two, I'm going to do a weekly Wyckoff stream for our members as well, for Tier 3 as well. So, just absolutely just everything that you guys pretty much could want. If you come over to us and you aren't learning, you are purposely trying not to. That's all there is to it. So anyway, we'd absolutely love to have you there. Our members are fantastic. They make it what's worth being there, I think. So join us there. howtotradetowin.com, all right? Excuse me. Let me see here. Ashley, what's going on? Says, yes, the amount I've learned is more than I could have imagined, and the new info keeps coming. That's the goal. I mean, for those, again, so many of our members have been with us since day one, 3.5 years ago. Others have been with us well over a year. And for the most part, you can't be everything to everybody. And so every once in a while, somebody will leave because it's just not what they were looking for. That's fine. But, I think you have to look at how many people continue to stick around, month after month, year after year. And we've got a huge retention rate. And I think that's what makes our community so strong, because we have so many people that have been here for such a long time. And, whether they came in brand new and just started learning with us, or whether they came in with skills already and refined some of those skills with us, man, it really is. You get a great group of people in there. So, and if you're new, by the way, don't forget, when you sign up, log into your account on howtotradetowin.com. And when you log in, you're going to have this on your account homepage. You're going to have this left-hand column over here. And at the top of that column, it says something like update your Discord username or something like that. And so you want to put your Discord username in there with the pound sign and the 4-digit number there that it tells you what to do. And then that way, that'll get you access to all your Tiers channels there on Discord. Sometimes, even though we talk about it all the time and we put it on the website, people join us and they're excited just about the education we have on the site, and they don't even realize, that, oh my gosh, there's all this other stuff. Additional education, everything, especially if you're Tier 3, over there on Discord. So make sure you guys do that, all right? Let me see here. Brian says, as a Tier 3 member, the most difficult thing is sorting through the amount of material. And that's the other thing, guys. We do have a ton of content. But when you come in, some things may not be what you're interested in, and that's fine. Don't worry about keeping up with it. If you're not interested in natural gas or oil or gold or silver or the stock market or crypto or whatever it is, you don't have to follow that stuff. But I am working on getting it, maybe making it not as scary for people, especially if you're new to Discord. It can be like, it's like a whole bunch of stuff. And, working with a way to use the site to kind of make it easier to navigate through the information there on Discord. But the one thing you'll never say is, oh, there just isn't enough content. That's the one thing I don't think you could ever say. Hey there, man. Chemo's here. What's going on, man? Excuse me. Budman, what's up? He says, jobs went south real fast and huge. Who would have thought it? Chris? Biden. Oh, Biden. Yeah, man. I'll tell you what. Jeff, what's going on, man? He says, what a time to be alive. Really starting to enjoy your streams. Well, hey, I appreciate that. Glad to have you checking in here. Budman says, it felt so good shorting Doge. It felt so good. By the way, we're going to talk about Doge today. We're going to talk about Ethereum. We're going to talk about Litecoin. We're going to talk about Bitcoin. We're going to talk about the stock market, gold, silver, the DXY, the jobs report. Got a lot of stuff to do here, okay? LXT, I produce more content per week than you can consume. LXT's been with us a while. He's seen it grow and do it, him and Chris Day and a whole bunch of others in here. So anyway, we'd love to have you there, guys. Let's go ahead and jump on over here and see what's going on. Well, let's talk about real quick here because it kind of has an effect on everything else more or less, right? So the jobs report came out today. We're going to talk about the DXY as well. Let me see here. So the jobs report comes out today, and let me look at my notes over here. Excuse me. So we added about 266,000 jobs in April, and there was a 978,000 expectation. So normally that's a very huge difference, right? You're expecting this huge, almost 1 million jobs to be added. You're getting like a quarter of that. That's huge. That's terrible. That's awful, right? But what if it's not as bad as it seems? What if it is a statistical anomaly? Because the numbers that they're giving you are based on seasonal adjustments. And seasonal adjustments are based on historical models. And last year was anything but normal, right? Last year was a really off year. I mean, strongly in the wrong way there with the COVID coming in and everything, right? So it is possible that, if not all, at least a significant portion of this number is the result just of the seasonal adjustment because of last year. And if that's the case, then what you're going to see next month is you're going to see jobs pop back up in line, and it'll be fine. Because I believe, if I was looking at it right, I think unseasonally adjusted. So if you don't adjust it for seasonal, the jobs number was like a million new jobs. Now the other side of that is something else. I've got friends who own businesses and whatnot, and they're trying to hire people. Whether they're, I've got friends that own bars and restaurants, and I know a guy that owns a limousine service. And these people are having trouble hiring. And, I know there's a lot of spin coming from the government, but at the end of the day, I mean, I'm talking to actual business owners, people who own business, small businesses, and what's going on. And so you have this this inability to get and retain workers at a lower wage. And it's not necessarily it's a low wage. I mean, many of these jobs are looking like $15 an hour, $20 an hour. So it's not that it's like some insanely low, pay or anything. It's not like it's minimum wage. It's a lot. It's just twice minimum wage. But the reality is, for a lot of people, in that wage range, what they're getting from the government and then the bonus and everything, kind of really outdoes that when you look at the taxes and everything else, and they don't have to go to work. And so when I say don't have to go to work, some of that's going to be lazy, sure. Some of it's going to be people, it's hard to convince somebody to go to work when they're going to make the same as or nearly the same as what they get for sitting home, right? But some of it, is going to be potentially fear of, COVID and whatnot. I was looking at something the other day, a report the other day talking about in restaurants, the kitchen area is like this hotbed for COVID. And so there's a lot of fear in going back, because a lot of restaurants have been open for, delivery or you can come in and order through the drive-thru or something. And there's been a lot of fear about, coming back for small wage for that, what they consider a small wage in return for potential of getting that. So, I'm not going to say it's all just lazy and, oh my gosh, I get this for staying home, but that's going to be some of it. Again, the other part's going to be some fearfulness out there with that. And so I think if you put that together along with the seasonality, the adjustment for seasons, I think that's why the number's so low. And if that's the case, then overall what happened today was a knee-jerk reaction. So we should expect that the dollar will still continue to rise then, if that other is the case. Which means anything that's jumped this morning relative to the dollar is going to continue its trend the other way, right? So I think that's something that we really have to, have to look at there. I think one of the big shortages for workers as well, not only is the, these restaurant, hospitality type things, where all the jobs we lost initially back in the pandemic, where the huge loss came from initially because everything was shut down. So it's not only there, but I also understand it's skilled manufacturing as well. I mean, I'm going to tell you right now, guys, I don't care what you're doing for a living. If you're not increasing your skills, your skill set, no matter what you're doing, you're just living life wrong, man. There's so many people, especially coming in from my dad's generation. They came in, and at that time, his parents and into him, you could kind of say, okay, I'm going to work for somebody for 40, 50 years and then retire and everything's going to be good, right? Well, we don't do that today, right? We don't kind of get that kind of thing. And so a lot of these people who thought that and who are coming on the back end of that find that they're losing their jobs and they don't have the skills to get a new decent job. So you should always be adding to your skill set, guys. Even me, I do this all day, every day, right? I trade. Now I have my company here for the last 3 years or whatever, but I've continued to increase my skill set. I went to law school for 3 years, well, 2.5, got out early, finished it early. I've gone and got a couple of master's degrees, but I also, I learned other skill sets, both educationally and hands-on. And, my goal, I'm a big collector of skills. And, and that way, no matter whatever happens in the world, I've got something to fall back on. And I think it just kind of helps make you, a better-rounded person as well, a more well-rounded person as well. So I think especially if you're, sitting at home, taking unemployment right now because of COVID and all this, I mean, there's so many ways to get an education of some sort that you can come out making really good money. And I don't have sponsors for this or anything, but just some things I've seen is something like Lambda School. There's a lot more of this proliferation of these companies where you can go in for free, and some of them will even give you a living stipend, and you can learn from home. Front-end web development, full stack web development, stuff like that, right? And then they've also got partnerships that makes it easier to get a job. And I mean, you could start out getting a job at, $50,000 a year or something. Now you have to still pay back, according to the agreement, the school and everything. But nonetheless, it at least puts you on that foot of skill sets that are, pretty lucrative right now. So that's one thought. You can go to your local workforce development center. if you're having trouble getting a job, or if you don't really have skills for the job, trying to, get into another area or whatever, a lot of times you can go through them and they've got free training. I know there's a truck driver shortage right now, huge truck driver shortage. And so, independent operators can make something like, I don't know, up to $100,000 a year or more, just driving, if driving's your thing. So, I mean, there's a lot of jobs and opportunities out there, but I think a lot of times when people say, oh, I can't get a job, what they mean is, I can't get the job I want at the price I think I should be paid. And I'm going to tell you guys right now, if you're working for somebody else, you're likely never going to get paid what you think you should get paid. And a lot of it's going to be because you overvalue what you're offering. The more specific your skill set, the more niche your skill set, the more you can charge. If you're going in and flipping burgers, guys, stop saying you deserve $15, $20 an hour. It doesn't take a lot of, I'm sorry, it's just the reality. It doesn't take a lot of skills to flip a burger, right? So, these are I think this is a lot of the confusion in this younger generation right now, getting out there and trying to work. And that then leads itself into into what government does. And the government makes it easier for not to go back to work, which then messes with the jobs number, which then messes with more government and more money coming in. You saw Kamala Harris coming off there saying, well, this is exactly why we need our jobs program and whatever, all this money we want to spend. So it all has an effect, guys. It all comes back to all that. Notice, nowhere in here did I put anybody down, say anything disparaging to anybody. I'm just talking about the reality of the situation, guys. And so, all that's going to affect what's going on, which is going to affect the markets because of how the money comes out from the government, right? We've talked about that before. The way the money leaves the government, goes into the primary dealers, which is how it gets into the markets, which is then, the treasuries are then, bought and sent back to, government, the Fed, which then, messes with the yield curve, rather than trying to mess with the interest rate. And so all these things are all interconnected. And if you've been keeping up with me for the last couple of years, congratulations. You might actually understand what I'm talking about. If you're new, don't worry. I usually go over it time and time again, and you'll get it eventually. But there's a lot of interconnection and all that. But, at the end of the day, the more government becomes involved, the more it has to continue to become involved, because it creates challenges and issues and problems that weren't there previously, or that weren't to the degree that they become because they've been involved. It's just the way it is, guys. You cannot, mess with one thing and expect everything else just to be fine. You're going to have ancillary effects that are going to hit everything else as well, which are going to create other issues within the government's going to go to. It's going to create other ancillary issues, and so it's just going to continues on like that. And that affects you in the markets and what goes on there. And you go, man, with all this going on and people out of work and all this crud going on, why is the stock market going so high? And it ultimately comes down into this big thing of how everything kind of plays back against each other there. So yeah, that's kind of where we're at right here, guys. And I make no mistake about it, guys. You know me, I'm a huge less government is better kind of guy. I don't pretend to know, the answers to everything. Anybody that does is just stop listening to them, especially if they're in government. Because, again, at the end of the day, government's reason for being is to remain. If you think about it, government, we have this great romanticizing of the government, right? Oh, the government's here to protect us. The government's here to do all this for us and whatever. It's a servant of the people, right? And what was it? Ronald Reagan, whether you like Democrats or not, or Republicans or not, or whatever, Ronald Reagan back, 30, 40 years ago now basically said, the most dangerous phrase you'll ever hear from the government is we're here from the government and we're here to help. Because the reality at the end of the day is people have learned to be in government because government's a cushy job. All areas of government's a cushy job. And so you want to remain in government. So the only way you do that is by government continuing to make people believe that it's required, that it's, and to the extent that it is now, which is always more. Government always seeks to increase power and never gives it back. The people have to take it back at some point. And that happens historically. We're running on 230 plus years of this democracy experiment here, right? We started out as a constitutional republic. We're now basically a democracy. Guys, there's nothing. If somebody tells you, you know what, a democracy is great because it protects everybody, no, it doesn't. It protects groups of people. And the way our government's set up is that we are designed for lobbying, and lobbying is what gets attention and money from government. So if your group has a good lobbying section to it, you're going to do well with government. If it doesn't, you're going to end up at the bottom of the pile of crud coming down. In order to give somebody else special privileges, you have to take away something from somebody else. Rights don't begin and end with government. Rights are there regardless. Government gives you privileges, and if they can give you privileges, that means they can take away privileges. And I don't know why I'm getting off on this whole side tangent here, guys. I'm sorry about that. Government's job is just to stay in power. It's really what it comes down to. And the way it's designed, especially here in the U.S., it's designed around doing that. It's designed to make that easier. So, it is what it is. Hank says, for the people, by the people, just not those people, and not too many people, and people who think like me. Exactly. That's exactly true. And it doesn't mean I hate the U.S., guys, or I love some other country better or whatever. I think there's a lot to be said about this whole imaginary borders issue, but whatever. At the end of the day, that's the reality of government. And that's the reality of democracy. And, we were fed a bunch of BS growing up. I know I was. I'm my late 40s here, growing up in school and everything, and especially me growing up in a military family. Government's great. Military's great. Democracy is great. Not so much. Is it better than most of the other stuff going out there? Maybe at times. But make no mistake, you get people that become tyrannical in power. Government becomes very one-sided if given too much room. And so, that's kind of where we are, I think. But it is what it is. We're in the markets, right? Let's see here. Niels, what's going on? He says, me hate our governments. Yes, plural. We have 5 in our small country. Yeah. And I'll tell you what, if you're somebody who goes out there and you invest and you trade for a living, or you're a business owner, you're an entrepreneur, most of the times you're going to have an even more of a distaste for government than everybody else, because you see how much extra difficulty that you find there with government. You're like, listen, I want to take care of myself. I want to do for myself. I don't want the government over here pretending like it's doing things for me. I just want to do it myself, right? I mean, that's why you become an entrepreneur. That's why you go in and you become a trader, because you want to do for yourself. It's hard to support the idea of government when government necessarily is going to take away from you. So, depending on whatever your group is. There's a lot of businesses out there who love government. Corporations love government because without government, corporations couldn't exist. Corporations get their legal status via government. Government wasn't there, there'd be no such thing as corporations. So if you don't like corporations, then you should necessarily not like governments, because it's the only... Oh, excuse me, hiccup there. That's the only reason they exist. Hey there, Mark. Good to see you checking in, man. But you know what, guys? At the end of the day, little of what we care about government is going to change anything. Government's going to continue doing what it does. I learned that a long time ago. I gave up trying to change anything. I just try, again, that's why I tell you guys, money, at the end of the day, true freedom doesn't come from your government, because that can change on a dime, right? Again, government bestows privileges and takes away those privileges, right? So at the end of the day, money, and if you think, greed is all bad, money's all bad, whatever, then this is not going to make sense to you. But at the end of the day, real freedom comes from having money, from having wealth. Because wealth allows you to ignore what your government says. If you live in a country that's awful and you're kind of really just kind of getting the nail to the head over there, and government says you can't leave, I guarantee you, if you have enough money, whatever it takes, to get out of there, you can get out of there. So money frees you from the controls of government. It frees you from the controls of time. It frees you from the control of location. That whole thing. It gives you freedom of movement, freedom of deciding what to do with your time. And these, I think, are the most basic elements of being human. This is what you should have. Unfortunately, most people try to do it via government, and that's just, again, it's more the same, just a different group of people. Doesn't get you where you want to go. Hey there, Spiral Architect. Good to see you. Good to see you. Hank St. Niels must be from Belgium, and he's correct. Orange Man, what's up? He said, and Trump wanted to make losing his government position impossible. Yeah, it's all interesting. Bianca said, wasn't real freedom something that starts within you? That's exactly right. That's exactly right. To be human is to be free. That's really it. To be human is to be free. So if you're not, government's going to make it impossible to be so. People say, oh, government gives you freedom. No, it gives you a level of servitude. It gives you a level of it doesn't, you are either free or you are not. You are free or you are some form of servitude. There's no, oh, I'm somewhat free or I'm kind of free. No, you are either free or you are not. And if you are not, then you are some level of being answerable to a government entity or some other entity above you. Now, we're not going to get into the whole idea of whether humans can ever be free, and they'll always go and seek groups and social and all this stuff, social status and all that kind of stuff, order or whatever. But at the end of the day, it just comes down to you're either free or you're not. And there is no, you're still free. You just can't do this, this, or that. Well, if I can't do this, this, or that, then I'm not free. Now, what that means at the end of the day, as far as whatever you guys want to argue, as far as, but if they're free, then they can do this, this, that. I'm not here to argue that. I'm just making the point that either you are free or you are not. There is no some level of free. There's always some level of not being free. But freedom is an absolute. You either are or you are not. So, yeah. And then Ross Marks, they say, you're never truly free, only to certain degrees. And then you could say, yeah, okay, well, if you look at that in as far as your internal, emotions or your psychology, you're never free of yourself. You're never free of your of the way in which you believe the current situation to be. There's always that too. Sure. But like I said, you are either free or you are not. If you are in any way hampered from doing anything, then you're not free. I'm not saying it's good, bad, or otherwise. I'm just saying you're either free or you're not. So, yeah. So, but government, anytime you're under government, you're definitely not free. You have rules, you have things you have to do. Again, I'm not arguing whether you believe that they're worth it or good or bad or whatever. I'm just saying, if you're under a government, you necessarily are not free. You have rules and things you have to follow. Guys, I didn't mean to go on this whole thing here. Sorry about that, guys, okay? So let's go ahead and look here real quick at Bitcoin. You see, and either I just lost a whole bunch of people that'll never come back after I did that, or I've gained a lot of people that go, okay, hey, this is all right. We talk about a little bit extra in here. Hopefully it's more of the latter than the former. So where are we at right here? Mr. No-Go, I appreciate you, man. Yes, LXT, we're looking at the markets. So where are we at? Well, guys, again, end of the day, we are still just going sideways, right? So we're watching two counts here. The biggest idea right now, the main idea, the macro look we're looking at locally here is that we're building this triangle and we're on wave D, which means A is potentially done. We think it's done. And B is either done right here or B is still in progress. So that's where we get these two counts here, this red and this black. So if we look at the black count, it would suggest that we've got A of B done here. And this is probably B of B. And so this gives us an A, B, and then 1, 2, 3, 4, 5 gives us a C. Now, if this black count is correct, then this move down was 1, and this is an A, B working on a C here for 2, and then we'll get this move on down here toward 51,392. So if we look at here, this morning when I first posted the update, I was looking at, okay, maybe we've got a 1, 2, 3, 4, 5. It's continued to push up here, so now we can look at 1, 2, 3, 4, maybe 5 here. This is ABC up, ABC down, so we've got a flat correction going on. So what do we need to know? If this black count is going to be correct, it cannot go above 58,420 and 20 cents here. It cannot go above here. If this pushes up above this, then this invalidates the black count here. And then we're left with this red count, which suggests 1, 2, 3, 4. And we're working on 5 with a minimum target of around 59,473. And then a secondary target up here of the 1 hour R1 pivot around 60,480, 60,550, this kind of area right here. Now, if we're doing this red count, then that means B is done. And so this is an A, B, C here. And we're moving up for, this is A, this is B. And we're working up on C here of D. So if we break out above that swing high, then it makes this red count, adds confidence to the red count. However, this would just be wave 1 of C. And the problem with this is that we cannot get above this swing high up here, this 64,666 kind of area. If we go above that, that invalidates the triangle. And that would suggest, okay, well, off these low here, we're advancing up here and we're going up. But if you're looking at the triangle, it gets kind of problematic if this is wave 5 here. Could maybe we have a 1, 2, somehow 3, 4, and 5, so this gives you a 1 and a 2? That's a possibility. And if that was the case, rolled out here, that would give us a 5 generally up here at 66,327, and that's still above B. So you'd still have to have shorter wave 3, shorter wave 5 than what we normally get. It doesn't mean we can't have that there, but it means, it's going to have to come in shorter than what you would expect. So right now we want to see, do we get above this and roll over? Or, do we stay below it and roll over here and head on down toward, 51,392 or so to finish out wave B like this? And then that gives us a new start for 5 up here for wave C. Or do we continue up here? And that's where we're at right now. Nothing's really changed from what we've been looking at for, a couple of weeks now? Or I guess since over here is 25th. What was that, about 2 weeks ago? Yeah, around 2 weeks ago. So we're just kind of moving sideways here. Now, what does this mean for everything else? Well, it means we've got free money moving around, or we've got money moving around freely in the rest of the alt market, right? You've heard of Doge jumping up there, and Bitcoin Cash was just monster move the other day. I actually thought about entering long on that the day before and got behind. I was just doing work and everything and forgot about it. And that next day, within 24 hours or so, that thing jumped up like 50 or 60%. It was huge. So we've had that. We've had Ethereum making its moves. Litecoin seems to be trailing behind at the moment, which means I'm hoping that we're going to get a bigger move here. So we'll see that, right? Let me see here. What's the name for all the lettered waves and points there, Scott? Scotimus Primus? This is Elliott Wave, buddy. This is Elliott Wave. It's something that we do teach at TWC as well. We've got many, many hours of Elliott Wave video education content. And then every week we have our weekly Elliott Wave session where we kind of look at charts and we kind of decipher what's going on with the Elliott Waves. How do we apply them? Why might it be this instead of this? Things to remember. Because really with Elliott Wave, at the end of the day, I have people sometimes ask me about time. How long is it going to take to get to the next point? First of all, understand if you're worried about those time relationships like that, that's a symptom of being impatient, which is an emotion. Okay, that's emotional trading. And so notice if you're really concerned about how long it's going to take something to get somewhere, because that means you're probably going to be jumping in and out of trades that you shouldn't be. That you're going to be doing a lot of emotional trading. But Elliott Wave is about form. It's about the form, the structure of the waves. It's not about price. It's not about time. It's not about distance, whatever. It's just about the form of the waves. And so always kind of keep that in mind when you're looking at it. So it takes a little bit to really get used to it. But the other thing that takes some time is just remembering, just trying to remember all the guidelines and rules. And then understanding the difference between a guideline and rule, all these things. But Elliott Wave is definitely something anybody can learn. If you put in the time and effort that's required to do it. If you think you're going to learn Elliott Wave in a week or a day or something, and you're frustrated because you don't, and so you give up, guys, when you're learning how to trade, no matter what system or method that you're trying to learn, you have to give it time. You have to practice. You are not going to get it overnight. And a lot of you, that's impatience because you came into the market. You're FOMOing in now because everything's rising up. The number of people that I know personally that are jumping into Doge over the last few weeks, in and out of Doge, because it's been talked about so much, but yet they've never traded or invested a thing in their life, is just outstanding. It blows my mind. And you know what? Almost exclusively, none of them are willing to listen to anything I'm trying to tell them. Every one of them thinks they know what they're doing. They think they're going to become millionaires overnight. That Doge is going to make them millionaires. And that's just not what's going to happen, guys. But this is, again, this is what usually happens as a new trader when you first come in. And that can be very dangerous if you don't notice it and you don't know that these things are bad for these reasons. You'll just continue jumping in there thinking that, this is the way you do it and what you're doing, and then life just kind of slaps you. The market just slaps you in the face. Yeah. Mark, you're not selling for a 50% discount. You've been holding since 2018, so what's another couple of weeks? Good times, right? Wind, what's up, buddy? He says Tier 3's weekly educational series now one dedicated to Elliott Wave. That's what I was talking about. He says is the best way to learn or practice Elliott Wave. Appreciate that, man. Definitely trying. I'm just, again, guys, if you're in there with me, I'm trying to help you get through the learning process so that way you get excited about trading. You don't give up after a few weeks and because things aren't happening, overnight like you expect. Try to get you to concentrate on what's important. So that way you can become traders. Guys, I believe that trading is such a fantastic skill that you can use, for the rest of your life. And I hate to see people that give up on it so quick. And that's most people, and it's going to happen. But I hate to see it. If you're with me and I've got some way of helping you maybe stick around longer so that you can get to that point where you see its worth and you see how great it can be, that's what I'm trying to do. I think it's a fantastic way to make a living, or at least to do something on the side. Yeah. Let me see here. Telluride says the worst thing that can happen is if you jump into the trading and then gain a bunch of percent and then think you're a genius who doesn't have to listen to experience. And that's what happens to most of us when we first enter the markets, guys. It does. It happened to me when I first started 25 years ago now? A lot of years at the beginning of losing because of that mindset. Lost a lot of money. I worked just to lose money in the market. I worked just to make money to lose it in the market. That's what I was doing for a few years there. And then, finally decided I got tired of that, so time to take the time to learn. And so that's what I did. Hopefully you guys do that as well, whether it's with us or anybody else. John Andrews says he's been slapped before. I hope you mean by the market and not, well, I don't know. I don't like to be slapped by the market either, but don't care to be slapped by a woman. Let me see here. All right. So anyway, so this is kind of where we're at with this. So as long as we can get this reversal here prior to this swing high at 58,420 and 20 cents here on crack, as long as we get that reversal off that, that really sets up the stage for this move down. So what we would look then for is, if we do that, a drop below what would be wave 4 of C here at that red line right there at 56,800. A drop below that's your first clue that the top may be in. Continued drop below wave B at 55,320 should add a lot of confidence to your account, and the idea that we're heading down to wave 3 down around 52,454. Should get a bounce up and rejection of the pivot for wave 4. Wave 5 should find its way down at least around to 51,390 or so, potentially as far down as the S1 pivot here on the 1 hour, which is right around 50,800. It may try to go ahead and push that little bit extra to get there. But that would be a great wave B, and then we'd look for a reversal and head back up. And again, you look for your wave D targets up here at around 62,700. Maybe the 1 hour R2 pivot up there at 64,300. But I don't know. Again, these are the 1 hour. These pivots will reset on Sunday. Sunday my time. When UTC hits midnight for Monday. And then the pivots will be different. So I don't know, if that upper pivot up that R2 really is going to make a lot of sense at that point. I can see us getting down to the S1 by that time, but then the pivots will change. And unless it's going to rocket way up there, which I don't think it necessarily will, I don't know that this R2 pivot anywhere up here will be the same. So, but at least looking for this move up here towards 62,700 or so for that wave D if we can get on back, especially if we can get back down here to this wave B pullback. So, that's kind of where we are with that. Let me see here. Oh, by the way, when I said tier 3, I'm talking about tier 3 with, and when anybody else I think refers to it here, they're talking about tier 3 with TWC. Not, whatever it is with Twitch or anything like that. Yeah. We've got 3 tiers, tier 1, 2, and 3. Tier 1 is just all the Bitcoin related stuff. Tier 2 is that plus, I think we've got like 19 or 20 instruments that we update daily or intraday there. It's also the basic education. And then tier 3 is all that and everything else. It's an extra 4, instruments that we do daily, intraday there. The crypto index, the indexes that we update weekly. Chart requests, chart critiques, all that additional education. So, it moves from 11 or 15 hours of education in tier 2 up to 80 plus hours in tier 3. Plus, again, that educational content every week with our streams, which are always, of course, archived and accessible. So, yeah, lots of stuff. Joe, man, I love you, buddy. He says, go tier 3 or go home. Yeah, just be sure, guys. Again, when you do join tier 3, don't be afraid to DM me or Adam and say, hey, I'm a little overwhelmed. We'll let you know where you should be kind of hanging out at first. Basically, the education, the Bitcoin channel, watch the chart requests, watch the hot takes. That's your thing. And then, of course, your streams every week. That would be where you start off and then, kind of branch out to all the other stuff we have if that's something that interests you. Yeah. So here we go with the DXY. So, again, we had this big move this morning, knee-jerk reaction off those numbers. And that invalidated the previous count, which then makes this now likely an A, a B, and then we're working on 5 down here for a C, which may or may not have completed at the lows here. As you can see on the 4-hour, we're down here. We're down and oversold. 4-hour closed off in there, bottomed out on Stochk RSI. If you look at the previous lows here, we've got lower lows. We've got, again, the agreement here with RSI. If you go further back, back here toward around the 19th or 20th of April, you can see that overall we're getting a higher low. I wouldn't necessarily look at that as a divergence, though, because you've got these deep moves here in between. But this does give you an idea that the overall shift of momentum is trying to change back here since the April 20th by printing this higher low. So if we can get this move back out, that's a pretty good sign. Let's see here. So April 20th, that's around this point right here. So we'll see if we can get this. If we can get a breakout back up here above wave B, which is 91.436, that should add a lot of confidence to the idea that wave 2 is done and we're heading up now. By the way, that's also going to be a breakout of this corrective channel, and that'll give you then a pattern target of maybe around 1.343 above the point of breakout based on the height of the channel there. And basically, that just kind of gets you right up toward this triangle, which makes sense. By the way, guys, if you have legitimate triangles, usually they're going to provide areas of resistance, or if you're going down, support. If you're bouncing up and coming back, support. Strong areas. Because, again, understand, all a triangle is this consolidation. Increasing price action and consolidation right there. So if you can break out above it or break down below it, it usually sends you down or sends you up, a good bit. When you do that. So, the potential target on that's looking pretty good off that there. Let's see here. Mark, you're an accountant? My best friend's an accountant as well over in Houston. Matter of fact, guys, something I'm working on for our members, for our Discord members, is starting to bring him in maybe consistently, monthly, maybe a couple of times a month to talk about some tax-related issues. Now, generally, it's probably going to be for U.S. more than anything else until I can find somebody that maybe has more of a... But see, that's the hard thing, trying to find somebody, because we've got members from all over the world. It's hard to find, different tax pros for all these different countries that we've got members in. But at least for the U.S., we'll be able to do that. And then we'll see how we can expand that, maybe to include others from other countries as well. But, maybe do some Q&A sessions, with your questions about it, where he can kind of give you some answers as well. So, good stuff, right? Yeah, I think it'd be awesome. I just hate that we can't, I hate that we're not all under the same kind of tax structure, so that it could benefit everybody just equally well. But I'm working on it, guys. I'm seeing what I can do with everything to see how many potential, accountant type people we can get in there to help y'all out. So no promises, but definitely working on it. Is that Ihardo? He says, or IJ? I'll just call you IJ, since the first two letters there. It says the DXY looks more like a wave 1 of C down in progress instead of the whole C finishing up. Yeah. Well, then you have to do this. You have to zoom out a bit. And so, right now we're looking at, it reached how far here? And by the way, guys, remember, there is no guarantee that this is the bottom here. Until we're kind of, definitely getting some breakdown, we're going to give the bulls the benefit of the doubt. But, we have to get up above this wave 4 way up here, circle 4, circle numeral 4, at 94.741. Until that, again, this could just be, I think we talked about it before, like a W, X, and then maybe a Y going up like a double zigzag there, or something like that. Or even this could be, ABC, WXY, whatever here, and this could be that first wave coming down. This could be, instead of 5 here, 5 could be in progress coming down. Still a possibility. But right now, things are kind of where they are. We hit the almost the 78.6 exactly. Let's kind of do this. There we go. We're a little bit above it there, it looks like. So, pretty close to that. So we'll see what happens. Again, it's all in steps. First step is we got to break out of this channel and get above wave B. Second step is then we have to get above this swing high up here. Third step is then we have to get above this wave 4 up here. So that's kind of where we're at the moment here, for sure. Yeah, the AC relationship doesn't look great, but still definitely very possible. Remember, we have the relationship. Remember, the fibs that we look for, are guidelines. They're not rules. And so the only thing that's required for wave C here is 5 waves down below wave A. That's all that's required. That's the minimum requirement for a legitimate ABC. And so sometimes, we get these things, where you have a stronger move one area than the other, or a more prolonged move one area than the other. But that's why we have to look at these, these levels along the way to kind of gain confidence that may be what's going on there. We can trade it as it's moving. Yeah. So yeah, no doubt. It's definitely, IJ, it's definitely not the preferred way that we want to see it, but it's definitely legitimate. It's definitely valid. And so then we just have to see, the price has to prove itself. It's the same thing we've been talking about since this potential low down here. Price has to prove itself. I don't like the fact that it starts off as a leading diagonal. I want to see a strong start off that macro reversal. Leading diagonal makes it questionable still. But the truth is, right now we've got a low, we've got a high, and we've got potentially a higher low here if we can get a higher high. Locally here, high, low, higher low, higher high, which gives us the possibility of the leading diagonal off that. Sure. So yeah, I hear you, and I agree with those things as well. But again, it technically, it is valid the way it sits. And so we'll see if we can get that up. Now, if it drops down below the swing low here, obviously that invalidates the count. That makes this the 4. That makes this the 5 in progress. But until that happens, we can give it, the benefit of the doubt and see if the bulls can pull this out and continue it up there. Because there's nothing saying here that it can't be. There's nothing here saying this definitely has to be one way or the other. Other things we can look at here, we're kind of high up here. I don't like this necessarily. On the Stochastic RSI on the daily, we're pretty high still up there. But we do have a lot of room to go. And, right here, let me kind of pull this off here. These lower lows, we've got higher lows here right now. So bullish divergence on the daily potentially showing up. But I would have liked it better if it was down in here. If you get a bullish divergence or hidden bullish divergence and oversold, or bearish divergence or hidden bearish divergence and overbought, it's a lot stronger signal. But could still be fine here. So it's definitely showing up. In terms of just trading pivots, we moved in sideways between the pivot and the S1. This is pretty close to testing the S1 as support. So in terms of everything else, I forget counts and everything else. If I'm just looking at this just like this right here, and we break out above this swing high, I'm feeling pretty good about it. If we get up, if we move impulsively through the pivot and close on the daily above it, and then get follow through, I'm feeling really bullish about it. I'm thinking that we're going to definitely head up. We're going to get above this. I'm feeling pretty positive that we're going to get at least above this swing high and potentially above this one up here. Because this movement here where you get near the S1, tested it as support, and then you kind of rally off it and above the pivot and continue up. I mean, that's a very bullish move in terms of trading pivots. So we'll have to see how this plays out off there. Let me see here. So that's where we kind of are with that. Now, as far as what does that mean with the euro? Well, the euro is just the opposite, more or less of that, right? Because it makes up 58%, 57, whatever percent of the weighted basket of the DXY, right? So as far as this goes, we still have right now a 1-2, 1-2 potentially still in. Now, this move up has got us around the 85.4 retracement. So starts getting a little questionable. But nonetheless, there's nothing here. I mean, remember, wave 2 is wave 2 as long as it rejects prior to where wave 1 starts. Now, if it breaks out above wave 1 here, which, where wave 1 here, it's wave parentheses Roman numeral 1 begins, so basically where wave 2, Roman numeral circle 2 ends, if it gets above 1.22432, that'll invalidate that. And at that point, it increases the odds quite a bit that this is just an ABC down maybe, or, and we've still got, again, 3, 4, and we would have 5 still going up. But notice, even when I'm talking about this, I'm giving you all these levels and what to watch, all these things. So it's all very tradable. You don't have to know definitively that this is or isn't the top here to trade it successfully. You just have to watch. You just have to understand what may be going on here, where your invalidation levels and how that changes things. That's all you have to know. So locally here on the euro, what am I looking at here? Get over there, volume. There we go. All right. I think we've got a 1-2 and then a 1-2, 3, 4, 5 gives us a 3, 4, which then this is, parentheses 5 here of C of 2 printing out. So I'm looking to see if we can get a reversal off here. And so what we need to then see is a drop down below wave 4 here. So this is here on FXCM. It is 1.20583. If we can drop below that, that's your first clue the top's probably in. Continue to drop down here below wave B at 1.19859. Should add a lot of confidence to that idea that wave 2 is done and we're heading down in this wave parentheses 3, which means a lot, a big move down. Of course, that also includes a breakdown of this corrective channel support, which again is another clue that the top may likely be in. But until that happens, we still have to be careful of further upside. And like I said, if we get above this 1.22432 here, that'll invalidate the count, and it'll suggest that you've got potentially this is bullish wave 5 heading up. Or that may suggest that wave 2 is still in progress, and that this is maybe a let me think here. That you would have a wave 1 here somehow. This would have to work out to a wave 1, and then you've got an ABC up for A, ABC down for B, and then 5 up for C as an expanded flat, large expanded flat. I'm not a big fan of that, but, you know, it's valid. It would be valid if you could make this, again, this right here, a wave 1 coming down. So it's still possible, but I think if we're breaking above that wave 2, even though I'm keeping that in mind, and I'm going to look for that count, I'm going to be starting to lean toward the fact that the bottom may, you know, this may be 4, and this is 5 heading back up. Which means I'll make a butt ton of money long in the euro against the dollar as it rises, right? I mean, it's not too difficult there. Don't, you know, you shouldn't be all, you know, into your currency. Oh my gosh, it's going down, it's going up. Just trade the dang thing. Make money off it either way, right? That's how I kind of see it. Let me see here. Hey, Crypto Mowgli, have a great weekend, buddy. Thank you, sir. You too. You too. Crypto Raid, what's going on? I see you checking out over here. Good to see you. Said they cashed out of Doge with something like a 2,000% profit at 5 cents. I'm not losing sleep over the further 10 times I could have gotten. Yeah, I mean, you know, again, at the end of the day, concentrate on what you got, guys. You know, as human beings, it's easy to concentrate on those things that we could have had. But the reality is, it's always hindsight, right? There was no guarantee it was going to do that. And so if you hadn't cashed out and price went the other way instead, you would have cashed out with a lot less profit, or maybe even would have lost money. You guys definitely have to learn to concentrate on what you've done, rather than what you may have been able to do. There's lots of opportunity to maybe do something else, you know, in the markets. But my God, guys, if you make profit and you lock that in, celebrate it. It doesn't matter what happens after, because there was never any guarantee that was going to happen to begin with. But you guaranteed that you made a profit. You need to celebrate your wins. Stop losing sleep over what could have been that you never, you know, might not have ever have happened. All right? Very, very good way to look at it there, Crypto Raid, for sure, for sure. New logo, new byline there, join TWC, learn how to make a butt ton of money and keep it. That's what it's all about, right? Or learn how to make money a buttload of times and then keep it. A little bit of money, buttload of times. You can do that too. Let's see here. So that gets us that there. Real quick here, let's take a look at what's going on in the stock market. Well, you know what? Before we do, let's jump over here to TLT real quick. Hey there, Bernardo. What's going on, man? Yeah, still looking for deflation. If you're just checking in, be sure to watch the beginning of the stream. You'll see my thoughts on the jobs number today and what that may or may not actually mean. Some things that to take into consideration. But yeah, I have no reason to think that we're not going to get major deflation at the moment. You know, we'll see if it plays out. Sure, we can have something else I've talked about. We can have an inflationary pop and then a deflation come in, and then you have stagflation taken over after that. We can have that still too. And, you know, we might be in that inflationary pop right now. But that doesn't change. Well, what it would do is it would make that deflationary drop a lot stronger, a lot harder. That's the one effect it would have. Sure. Let me see here. So TLT here, these are your government-backed securities. And so, you know, again, we're looking at this 1, 2, 3, 4 potential count here. Locally, let me see here. Let me see, let me measure this out. Okay, so that's shorter. So it's possible this could be a leading diagonal for wave 5. So 1, 2, 3, 4, 5. You can see that Stochar RSI on the 1 hour is dipped, bottomed out just about here and oversold. Locally, we've got hidden bullish divergence right here. We've got a slightly lower low here with the oscillator. And then we've got higher lows right here with, as you can see here, slightly higher lows there with price. And, you know, it's pretty decent candle here. Zoom into the 15-minute real quick. 5 minute, let's get in there and kind of see this. Yeah, I mean, you could argue you've got a 1, 2, 3, 4, 5. So there's A, there's B. Maybe a 1, 2, 3, 4, 5 here. Let's make sure this wave 3 is not the shortest, though. Let's see, wave 5 will be longer. Oh, wait, let me see here. Let me kind of pull it from the top there. It looks like this might not be a 1, 2, 3, 4, 5. Let's try this again. Get it from the right area there. So as we can see here, this drops down below the 1. So this would be larger than this right here. And of course, this is the same way right here. So possible ideas could be a WXY or, you know, an ABC here to give you a W, and then you have an X, and then you have an A, B, C as a Y coming in here, or even WX, and then Y here is an A, B, 1, 2, 3, 4, 5 kind of thing. So, you know, the problem is we've zoomed in so low on it as it is, it's not worth kind of zooming in there further. So you just kind of stick out here a bit and you look at it and you go, okay, well, if this is a leading diagonal right here, you've got that breakdown so far. And you should look for it to target this area here, which we're just about at. There is this gap right here, so it would minimally need to get down here to about 138.70, the top of that wick, to fill in that gap, if you were concerned about it doing so. And so, you know, I mean, it could drop down to 138.45 and get you 61.8 and clearly fill in that gap there. And then you're good to go on that, right? A little bit of a gap over here. Gap over here that was filled right there. Attempted fill of the gap there. So there's still a little bit left down there. So we'll see what happens. But right now, as long as it remains above this swing low right here, it looks like we've got a 1 and we're working on a 2 of 5 here. So again, this is you know, this shows you the fear in the market basically. TLT is going to go up as people become more fearful in the market. The other way to look at it, because they want to get to those government, you know, government securities there that protect them, right? Other way to look at it is your TLT against junk. And so we've had this move here since mid-March, kind of moving up a bit. We're hitting the resistance right here. But if we can get a breakout at some point of this resistance, this shows us that people are moving from junk, which is your corporate bonds, which is what you're in those junk bonds during a risk-on period. So this is all risk-on right here. And when you go to risk-off and you go to protect yourself, you get out of your corporate debt, you get out of your junk bonds, and you get over into your government securities there, right? Your long-term government securities. And so as this moves up, that signals that move out of junk into your government securities, which tells you that people are going to a risk off. And what does risk off mean? That means that people are not going to be jumping into anything that's really risky, which means if you're trading Bitcoin, guess what, guys? At the end of the day, Bitcoin is one of the riskiest things out there. If this starts making some strong roads up, I would be careful with Bitcoin. It doesn't mean it can't go up, but, you know, realistically, your when there's a risk off period, people get rid of their riskiest assets first. Now, what do we know? We know that with Bitcoin, let me see, I shared something here not too long ago. We do know that this is going on, right? Or it has been going on since the beginning of the year. Let me see if I can find it here. Oh, right here. 90-day fund inflows. So I've got this chart here from ByteTree, and this takes out the miner sales. Why? So that way I don't have to have somebody come out, oh, but that includes miner sales too. So this is just 90-day fund inflows, okay? This shows a strong decrease since the beginning of the year. So, whereas you have your Bitcoin price here in blue, you notice how it stalls out as you start getting this sell-off. Or this, you're getting your net inflows to your exchanges from your funds has been dropping for the last 3 months here. And Bitcoin's gone sideways as a result. Remember when I told you that with Bitcoin here, realistically, all we've been doing is moving sideways right here, right? From February. A little bit higher high, then we got a lower low here. We're just moving sideways. That aligns perfectly with what we're seeing right here with those fund inflows. Now, does that mean maybe they're going to hit a bottom here and then pop up? Sure, maybe. But we have to recognize that fund inflows have really dropped off in the last 3 months. And that's why Bitcoin appears to be moving sideways. Remember, if you guys have been following me for a year or more, I was talking about how once we're around that 40, 50,000 level, that we're going to need, retail's not going to be able to pump up price. We're going to have institutions buying in to push price up after that, around that area. And I think we're seeing that right now. That's exactly what we're kind of seeing here, right? By the way, just so you understand, the net fund inflows, which is what this is viewed as a rate of change. So it's the difference between one period and N days ago. So a 30-day period shows the number of Bitcoin held by funds compared to 30 days ago. So this is over 90 days. So this shows you that over the last 90 days, the amount of Bitcoin held has shrunk. So they're getting rid of Bitcoin. That's how you read that. Over the previous 90 days, because this is the 90-day inflow chart here. I had somebody that said, oh, but there's different figures with one of the other services out there. But I think they're just looking at maybe overall aggregate basis or something like that rather than just looking at a 90-day comparison. So it's just saying this quarter after the previous quarter, this 90 days after the previous 90 days, I won't say a quarter, it is usually a quarter, but, that there's a significant outflow of Bitcoin from the funds into that. Let me see here. Let me see. So yeah. That's what I'm kind of seeing here. So I think it's important to kind of pay attention to that, what's going on there. I think I gave you a link here as well. Yeah, here's the link. You guys can click on that link yourself. And it'll bring this up here. And it has a couple of different things here. You can look at Bitcoin price in blue versus the Bitcoin held by funds. And so, it shows the number of Bitcoin held in the funds. It combines the European and Canadian ETFs with the U.S. and Canadian closed-end funds. And so, as you can see here, this drop is nowhere near as significant as what we saw in the other one, right? But remember, the other one is comparing their holdings, this current 90 days versus the previous 90 days. So what it tells you is that locally, the last 90 days, there's been a strong sell-off, a strong removal of Bitcoin from their funds. Overall, that just results in a bit of a downturn here. So maybe, from I don't know, whatever this is right here, about 746 down to 732 basically. 746,000 to 732,000. And this is the, of course, total held by them all. This doesn't show you the change in the last 90 days. So that's the difference between that one right there. And by the way, it gives you the numbers here as well. And then what's going on here with the 90-day flow here. Now this is the 90-day flow. Look at how much larger it is with the selling by the miners. Down here to 37,343. If you subtract the miners selling in there, 49,130. If we look over the last 30 days, there we go. You've had this move down here, but it seems like since March, they added here in April and then sold off strongly again here. And we're almost back down to where it was at the lows here at the end of March, beginning of April there for a 30-day over 30-day. So that would be this previous 30 days, current 30 days versus the previous 30 days. The sell-off there is what that is. So yeah. Let me see here. Lamb, what's up, man? He says that could be some big players taking profit and riding the rest possibility. It's possible. But this is these are funds. These are funds necessarily. This is the BTC ETC, the Purpose Bitcoin ETF, the CoinShares Physical Bitcoin, the Wisdom Tree, the Purpose Bitcoin ETF, USD and CAD, Grayscale Bitcoin, 3IQ, and Osprey. That's this right here is these funds specifically. Now we know Grayscale's been having a lot of trouble. We know Grayscale continues to just kind of be down, right? And now they're saying they agreed to use their funds to buy more Bitcoin because that NAV ratio is so low, and to even buy more than what they normally are allowed to do. So you're going to see maybe some of that buying is coming from them because we know specifically that they want to do that, or that they're doing that. So definitely something to watch in there as you work through it. 7-day, there's your 7-day. So this latest 7 days there versus the other 7 days. You see how it keeps changing? 7-day versus 7-day, and how it's kind of continued down here. We had the high up here around mid-December, end December there, and then it dropped off there beginning of January, end of December. Remember that? We did have that. Remember that? Then we moved up here a little bit higher mid-January, and since then have continued to sell off on your 7-day inflow average there. It's continued selling off. And so as you can see here, of course, you had the drop and then a spike there, and that was the last thing, and since then just kind of went sideways here with that spike up there and then kind of down here. And Bitcoin's having trouble getting some traction right now. They got other information here as well. As far as the periods here, their exchange traded products, their Bitcoin flows there, all that information. So, you can go there on this post right here from May 5th, and I've added that right there. You can also, if you need it from right here, there we go. It's right there in the chat now as well. Telltale, good to see you, man. Is the Grayscale discount due to increasing competition from other options for fund investors to get exposure? That's the thought right now. That's the going idea. There's no guarantee it is that's what's going on, but that's the narrative that we're trying to kind of say right now, because there are cheaper, more flexible ways to get involved. That kind of way without having to go through Grayscale. And if you guys remember, probably about a year and a half ago to about a year ago, I was talking about that. Remember I said Grayscale is going to be doing great until, they come in. There's going to be other products that are going to come out there to make it easier and more flexible ways to get in. And I said when that happens, we'll probably see Grayscale losing their dominance. And that's kind of what we're seeing here. Yeah. I've also mentioned that once Grayscale lost the arbitrage, that we'd see we'd see them kind of drop after that. And again, that's part of what we're seeing as well. The reason to be in Grayscale for a lot of these funds was the arbitrage. You get in low, you get out high, in 6 months, rinse and repeat. Yeah, until the arbitrage, didn't work anymore. It doesn't work anymore right now. So yeah. All these things that we've been talking about for the past year and a half, as far as these things go, are starting to play out now. So, there's that. Let me see. Oh, here's something real quick I wanted to bring up. This is another thing that I've talked about multiple times before, guys. Those of you who've been around a while, you might remember us talking about this. But the idea that moving... Okay, so there's this big... by people who first come into Bitcoin, and some of the maxis that are in there right now, they've been around a while. Again, romanticization of this idea that cryptocurrencies are going to be this big this big shift of wealth from the haves to the have-nots, and it's going to create it's going to destroy the power that government has, right? And I've argued for years now that that isn't what's going to happen. I said, that's what people are going to think. I said, but at the end of the day, it's just going to increase the wealth. The rich are going to get richer. And governments are going to use it to increase their power, not decrease it. And so right here from PayPal, they said that they talk here about the government being able to move to a digital dollar, which again, as we talked about, would be the way it is. They're not going to, take Bitcoin. They're going to create their own US dollar, digital dollar. It's going to be fully, backed by the government, just the way, fiat is. But that's going to allow the government then more options of getting money out, right? Now, they still can't just throw out money. The Fed just can't give direct payments to U.S. citizens right now. It's against the law. But Congress can change that. And I'll be honest, with the structural change we're seeing in government right now, I wouldn't be surprised to see that happen. A lot of people talk about UBI. This is the way that it could happen. It's a lot less frictionless. It costs a lot less, makes it easier. You directly, deposit the funds into a wallet, potentially, like I said, potentially held by like PayPal or somebody, rather than having to worry about checks. So now all of a sudden the government doesn't have to worry about all those wasted checks that go out and never get cashed. They might have an easier way to verify who they're sending money to. One of the big issues with government sending out stimulus checks is that a lot of it went to people who weren't even U.S. citizens, right? So a lot of wasted money there. This would be one way of overcoming that. And what that does by doing that is it increases government's hold over you. It increases their power over you. Everybody was like, oh, Bitcoin and cryptos are so great because anonymous, this was what we thought, years back. Anonymous, government can't track you, all this kind of stuff. And what you find out is that actually it's easier for government to track you electronically. If I walk up to you and give you a $5 bill, that's almost impossible for government to track. But if I go write you a check or I use my credit card to deposit, or Venmo or PayPal or whatever, all of a sudden there's this electronic record. It's very easy to follow you now and to follow your funds. More government surveillance, more government control, not less. More power to government, not less. And who makes money with all this? The wealthy. Why? Because the wealthy have the money to buy the assets when they're cheap to begin with. Think about it, guys. Your big professionals tend to buy at the bottoms, right? This is what we talk about. It's a big difference. Retail comes in and FOMO's at the top when the big guys are selling. At the bottom, retail just believes it's never going to end. They're selling. They're trying to get out there, done with it, and that's where the big guys are buying because the big guys have the money and the time. They can buy it and hold for a while, and it'll go up, and it'll go up, and then it'll go up faster and faster, and then you'll start FOMOing in transfer of wealth. Because you're going to FOMO at the top, and then you're going to get either liquidated or close out with a loss, right? Isn't this what usually happens? This just makes it easier to transfer that wealth. Stop believing all the nonsense you follow by the Bitcoin maximalist out there. I don't have anything against them personally, but let's be realistic about what's actually going on. It's not what they're saying. It's what I'm talking about right here. And if you understand that, you can stand to make a lot of money off it. If you continue to argue against it and act like everybody does online, you're going to lose money. What you're going to see, guys, most of these people that you're following right now are not going to be around in the next bear market again, just like last time. They're going to disappear because they weren't able to keep the money they made on the way up. They're just like you. They just are better marketers. And so you think that they're good at what they're doing. And then all of a sudden they disappear. They lose all their money, they disappear. Shut down their accounts and everything. That's what happens. But that's most of social media, guys. That's most of your influencers on social media. It's the same mindset you have. They've just parlayed their marketing skills into making it look like they're better than what they are. And that way they can bring in more money. And they can buy in more, but then they don't understand about locking in that profit and maintaining profitability at the end of the day. So kind of looking at these things, right? Scott, what's going on, man? Scottimus Primus, I like that name. It says BTC just peaked at 58,700 and dropped. How does that affect what you said a few minutes ago? Let me see what you're talking about here. Let me kind of zoom in a bit here. Well, we're above this the swing high here. So this black count is no longer valid here. Let me see if there's something else we can see this. No. I think for right now, we're still potentially looking at... I'm trying to see here. The other possibility, so this black count that I had is out now because we've made a new higher high, okay? So that means that this red count is probably in play here. So we've got our targets there. Is there a way that maybe we can get an expanded flat here, maybe? Let's see here. If we can work this into a WXY, if we can work this into a WXY, we can still have an A here. And then potentially the same thing here with like a WXY here. So A, B. Oh, actually, would be an ABC right here. So you have A. I'm just trying to figure out if we can get maybe some sort of a flat here. So this would have to be like a WXY or an ABC, and then this would have to be a ABC or a WXY here. So even if it gets up toward this area, then we would have 5 down potentially toward these lows here. I'm gonna have to take some time and look on this Discord. I'll let Discord know today. I'll look on this a little bit by the afternoon update. I'll see if there's a way this could be a flat correction for wave B, and we still have wave C coming up. I just don't see anything good coming out of this in terms of the triangle if this is the count here, if this is 5 up here. But nonetheless, still looking for a little bit move higher up. If it drops then back down, below that pivot there, that would definitely have you looking at this probably as a flat correction here, expanded flat. And then you'll have C going up. You have that room to run C up there. I don't see any reason for Bitcoin to break out anytime soon. I think we've still got some more days of sideways. So, that's also one of the things that keeps me looking at possibilities on how this wave B could play out here. Because that would keep it there. Otherwise, it's going now and it'll break out and then it'll take off, pretty quickly here, within a day or two or something like that. And that, of course, would invalidate the triangle, which isn't, necessarily a terrible thing. I mean, it's just we'd have to go back and really kind of figure out what may be going on with all these potential wave, 3-wave movements here along the way. So for right now, still looking at the targets we're looking at. If we hit them and then pull back below the pivot, then I'll be looking at this probably as an A, a B, and a C down here maybe as an expanded flat, and then C up for D. So yeah. And the weekend's coming up, so, if you trade weekends, guys, always be careful. Remember, less liquidity, in other words, less volume often, so it makes it easy for price to really kind of move hard without putting as much effort into it, which often catches people off guard on the weekend. Scotimus Primus, you're welcome, sir. Thank you for asking about it. Sure. Yeah, sideways is not great for leverage because leverage you're going to have to pay in, guys. Anytime you're using leverage, you've got to pay. Here with crypto, you've got to pay every 4 hours or so. So the longer you're spending going sideways, the more it sucks because you got to pay all that money out consistently. So if we look at Litecoin, for instance, so I got out of Ethereum. I was in that Ethereum long, got out, locked in profit. That was good. And because I was thinking, where was it? It might have been this area right around here. I think it's where it was. Because we've got the all-time high, which on Coinbase is right around 367.66. If we go over here. Oh, wait, no, it's not. I'm sorry. Where is it here? Why is that not showing up anymore? Let me kind of zoom this out. Okay, here we go. Make it a little bit easier to see here. So we've got this all-time high sitting just above us here. I don't know why my line moved there. But basically, the all-time high here on Litecoin, here on Coinbase, is right around 420. Now, depending on what exchange you're looking at, it might have already hit that all-time high, or it might be close to it. Just depends on the exchange. On Coinbase, it's up there. So right now, we're dealing, see these wicks right here? All this supply is in these wicks. That's what we're dealing with right now. But on a break about that, things really start getting kind of interesting. So, let me see here. What did I say it was? 420? Yeah, 420. Everybody laugh. Haha. So that's that all-time high we're kind of looking to break out of there. And so I'm looking, that's why I kind of got out of my Ethereum long and kind of got into to Litecoin. Because I was looking to take advantage of that. And we've just been going sideways. So Lamb there was talking about sideways isn't good for leverage. No, it's not. You're paying freaking fees, you know. And it just is what it is. But I'm holding on at the moment here, waiting to see that breakout. As you can see here, the 4-hour Stochastic RSI is dipping into oversold. 4-hour RSI is still high, but right now it's finding support right in this previous area of resistance support here. So we're still, you know, we're still fine on that. 1 hour, we bounced off the bottom oversold, starting to cross bullishly. Locally, I believe we've got 3 and then a 4, and I think we're working on 5 of 3 right now. Now, based on the height of this range, that would give us a target up there of about $404.91. Based on the idea that this is a, let me see here. That's 372.70. Just slightly higher here. Based on the fact that I think we've probably got a 1, 2, 3, 4, 5. So this is a 1, and then maybe an A, a B, and then 1, 2, 3, 4, 5. Working on finishing C of a flat here. That would give us a wave 3 up here at around 423.5, and then a wave 5 up here at 443.09. And of course, those could overextend once we're breaking above this 420 area here, and heading into that, those new all-time highs there. You notice that 420 area is this R5 pivot area on the 1 hour, 4 hour. So that's why I got out of my Ethereum long and jumped over here into Litecoin, and we'll see if we can get that breakout and head up on that there. Let me see here. Oh my gosh. Sorry, guys. Talking a lot here. Let me see here. Yeah, Brent. Yeah, you caught up with me? Okay, yeah. Yeah, because as I mentioned to you guys over there in Discord, you know, I said I was long Ethereum there, and then I got out, and I went into Litecoin, and I was explaining my thought process why I did that, and what I'm looking at here with the Litecoin chart. You know, Litecoin has lagged a bit. I'm not gonna lie, I would love to see it pull a BCH and just pop on up for 50%. That makes rich men even richer. But anyway, you know, I'll take what I can get out of this. A move up even just to 400 or 420 would be amazing profit on my end from the way I have this traded at the moment and the size I'm using. But, you know, obviously jumping up to 443 minimum or really just kind of ramping it up from there would just be unbelievable great bits of return to jump on that. I'm a little salty about BCH. I don't normally get too salty, guys, but man, oh man, I was thinking about it when I did the update for Discord. I was looking at it, I said, man, I need to go ahead and enter this, get long, and then just got behind, and it was working, and forgot about it that night, and, you know, that night into the next day, really saw that big move up. Life is what it is, right? Yeah. Your alts, you often see rotations between different levels of alts, different sizes of alts, because that's what people do. They get in one, they run it, take their profits, put it into a different type of alt or whatever, go with the profits on that, get out of that, put it into a different one. So your money just rotates. So there's not like actually new money coming in, potentially. There's just a lot of rotation going on with what's already in there. Yeah. Do I want to take a look at Ethereum Classic? No. Yeah, man, that was that one I talked about 2 years back, maybe. And I was talking about it getting above 100. And then the bear market came, and that took a while, right? And so here we are now, back here above, what did we hit here? I can't see right here. There we go. There's 170 something, wasn't it? 179.83, yeah. So count-wise, I think we may have 5 done. That's possible, in which case we would look for a pullback at least down here toward, and that just happens to be at the pivot as well. I didn't notice that. I did this on a shorter time frame, on the 4-hour. But anyway, yeah, you'll see how that aligns. My 4-hour chart target here aligns with the daily pivot there. Right back down here at around, $33 or so. The other possibility is we're not done here, that this is actually wave 3 up here, in which case we'd be looking for wave 4 to pull back to this green box, which is 91 to 112. And then we'd look for wave 5 to do a minimum here of 200 to 235 right there. I want to say it's done, but I'm not convinced it's done at the moment. So we're going to have to see how this plays out here. You can see on the daily here that we've, topped out over here and overbought, crossed back bearishly. Still an overbought, but curled down. But the thing is, what keeps me iffy is that we don't have any kind of bearish divergence in the RSI or the volume. Usually you're going to get, on a wave 5, you're going to get divergence in one of them. So that's what keeps me here thinking that might just be a wave 3. So this might be something like a 1, 2, 3, 4, 5 to finish 5 of 3. And then 4 would be this green box probably, which would be the 38.2 retracement there. The 50% retracement, and then the move up there to generally expected wave 5 target. But with this kind of pop right here, we could definitely potentially see wave 5 popping up even higher, finishing off another blow off. And if that were to happen, we'd expect, once it tops, strong thrust back down. So you got to be careful if you're going to trade something like that. A lot of people hold on because they get greedy and they think, man, I want to get every last penny along the way. And then when it comes time to actually get out, they can't get out. Everybody's trying to sell. The exchanges go down. They can't get out. So all of a sudden they're losing all that profit and maybe even what they could have already locked in. Previous high. Because it moves down so fast when you get a blow off top. Just as fast as it runs up and even faster on the drop. Most people can't get out. So there's no use actually holding and waiting for all that many times. Unless you try and get out as it's moving up and just not worry about getting the exact top. Or close to it. You just, if this is 3 and this is a 4 on a pullback and then we get similar thrust up there for the 5, you should just be thankful to get out at some point. Stop worrying about trying to get out the exact top because most likely you're not going to be able to. Either somebody else's orders are going to get filled before yours and you're going to have to, get filled much lower, or you can't even get in to set the sell order. That's what usually happens at the tops, guys, on things like that. So be careful with that. Market is definitely bananas right now, Hank. By the way, guys, all of these things, all of your coins are generally going to rise right now. And this is the problem with new traders coming in at the top, because you really can't, for the most part, whatever comes in is just going to continue rising, right? At some point. And it's not going to be every single coin, but the majority of them are going to pump. Because you get retail FOMOing in like crazy, and you have the rest of us pros taking advantage of that. And so, retail comes in and they start thinking, man, I can't do any wrong. I'm godlike. Every trade I do is making me money. And then they lose, right? That's what usually happens. I'm not making fun of it, but I'm just telling you what usually happens realistically. I mean, that's really what happens. And by the way, my targets here aren't time-based. I just drew it down. It just happens to be way over here in July or way over here in June. Those of you that follow me know I don't give any thought to time. I'm just looking at the structure. Where's price headed? So, yeah, don't think that says you have to wait till June or July for it to get there. How well do stop losses work on these fast drops I'm talking about? Not really well. Not really well. 8 depends on how strong the drop is, how liquid the market is at the time when it drops. But, if you put in, you're going to put your stop loss usually, a stop loss is just, if price is moving up, your stop loss is a sell. So you're going to be in order behind everybody else that put their sells right there in that order first. And then you're going to be behind everybody whose sells are above yours. And what does that mean? Well, that means that if it gets to the point where you want to sell and there's nobody left to buy at that point, price is going to continue dropping till you find a buyer. That's where you get slippage, which is when price moves further than where you expect to get out of a trade. Just because there's no liquidity there, you can't fill the order. I mean, you might, and I see a lot of people yell at the exchanges, "Oh, it's not fair, and you're stealing my money." All this. No, it's just there's no liquidity. Nobody's there to buy. If there's nobody there to buy, there's absolutely nothing an exchange or anybody else can do for you, guys. Remember, every trade has two sides. You have a buyer, you have a seller. You have somebody going long, somebody going short. If you do not have the other side of the trade, your order cannot be executed. There's no way. It's not magic, guys. And a lot of new traders fail to understand that, and so they get caught like that. They don't realize that, they're going to have to wait for maybe a whole bunch of other orders before theirs to get there. Which means that if, like I said, by the time it gets to your point, if there's nobody there to buy everything you're trying to sell, then whatever you can't sell at that level is going to keep dropping until you find a buyer if you're the next one in line. If somebody is ahead of you, if you've got a few traders ahead of you trying to sell and price drops because there's nobody to buy there, then you're in line, guys. You have to wait until they get filled as it falls lower and lower and lower until your number comes up, and then you find a buyer. That's the way it works. So, yeah. Hank says you can use market order to sell or buy. Sure you can, if there's a buyer. And that way you don't have to wait necessarily an order for the next, for that price. Or if you can get in between some orders, you're going to get filled, at least as long as there are buyers to fill you. But if there's no buyers to fill you, you're still going down. You're still getting slippage. There is no guarantee anytime you try to get in or out of the market that you can get in or out at the price that you want to. The only way that happens is if you have liquidity on the other side. Somebody willing to buy the other side of your trade. So yeah. Man, Crypto Rage, you got out of tell? I see that being talked up everywhere in all the social media and whatever. You guys may notice most of what people are looking for are these quick overnight profits. It makes no sense. Most of the people aren't going to make money on these. They want Safe Moon and all these other stupid things and Tell and all this other nonsense because they think, they're going to get rich overnight or it's going to be some huge inflated thing. I saw somebody saying Tell was going to hit $1 before Doge or something like that. But you guys have to understand, when you see people talking like that, it's all emotional. There's absolutely no research or analysis behind it. But yet this is what the average retail trader FOMOing in right now is reading and trading off of. Don't be those people. Slippage is definitely better than no execution at all, for sure. But it still sucks either way. Especially when, had you got out on the move up, where there was liquidity because everybody's trying to buy and you could just sell into that. But instead, you waited too long and now you're dropping below where you could have already got out and you're dropping lower and lower. That slippage then definitely sucks there. It's better than not getting filled, but still really sucks because you could have had more profit locked in had you sold on the way up there. Sure. Hey, Ross Mark, I really appreciate that, buddy. They said I'm by far the best antidote against being emotional. I appreciate that. That's the goal. Emotion should be spent for time with your family and enjoying trips and, time together with them and whatever, not for the markets. That's how you lose your money. So Doge, last time we talked about Doge, I told you we had a minimum target of this green box right here. As you can see, that was right there around 55 or so. As you can see, we went up to the R2 pivot there, which was 69, but look what happened. Prices come right back into my box to find support. So if I look at this, this goes 1, 2, and then 1, 2, 3, 4, 5. So I think that's a 3, 4. We should have further up. Remember my secondary target up here at 80? Let's see how that'll do. If this is 1 here, and that's 2 on that pullback, that gives you that big 3.618 extension, which is great. This right here gives you a 38.2 pullback. You see that? It's a good solid wave 4. And then wave 5. See if I can kind of zoom in here a little bit. The usual way we look to find the extension there, right there, 80 cents, 80 and a half cents. Get your 618. So that's where I'm kind of looking. So if you were with me a week or 2 ago or whatever when we were looking at this, you already had your targets on there, and so far things are looking like what we're expecting. So a breakout above the swing high should have us looking up there toward 80. Now it can break out and go higher. It can overextend, and it may even hit R5 up here. It might run all the pivots on a sudden, fresh interest in it. Overextend, run all the way through the pivots here. It's definitely possible. That'll get you up there around $1.35 or maybe even higher on that. But if it's getting around that point, I think that does wave 5 and that's done, and then it drops on back. And so we'll see here how that ends up playing out overall. But so far the counts looks like it's working pretty good. So far. Real quick here, let's see. If we look here at, pull this other chart up here real quick. I'm just about to go here, guys. But let's go ahead and pull up the NASDAQ. Oh, by the way, speaking of Doge, here's another thing as well. Hedge fund telemetry is noting that the weekly Doge chart has a DeMark 13 combo sell countdown. So when this week closes right now, it looks like it's going to close at a 13. If you don't know anything about DeMark, that's what you're looking for, not the 9. The 9's a pause. The 13 is the really, we're serious about it probably being a top. But it still doesn't guarantee that it'll reverse. But nonetheless, that 13's in play this week. So through the end of the week there, through Sunday, the market close on Sunday. Let me see here. Oh, man. Ross Mark says, I know you're a technical guy, but is there a point at which it's impossible to chart a rational behavior such as Doge? No. It might go beyond what you chart initially, but then you can, when it tops and pulls back a bit, you can then just figure out where you are in terms of the count. Yeah, I mean, there's times at which you're going to get the FOMO kick in. Sure. Yeah, but, then you just readjust your account for when that happens. Yeah. Don't believe anybody that tells you just can't chart. You can chart it all, guys. And, the idea of Elliott Wave, more than, these targets, is understanding the time frame you're on, the trend on the time frame you're on, and noting where the possible reversals might be, and understanding that there is actually structure to movement. Even when there's an overextension, overall price tends to move the same way. 5 waves, 3 waves, right? You know, we got guidelines with our fibs. You know, they don't necessarily have to get to those points, but generally it kind of moves there. So you get a much better understanding of human behavior. So sometimes it overextends. It is what it is. You just kind of work. You just kind of go back to it then and look and see. Okay, is it that wave, or did you have to? Is it going to be a subdivision of the wave you're in? That's all. Yeah. What I mean is ignoring a channel, etc., and simply rising above. Oh yeah, sure. Yeah, it'll pop out of channels and stuff. Sure. When you get aggressive selling or buying, often your channels won't hold. Yeah. And then you just look at pattern targets based on the height of the channel, on the point of breakout or breakdown. And that starts giving you some idea of where it may be headed. It doesn't guarantee that that's where it's going to get to in reverse, but it gives you, again, the idea is to understand the flow of movement so you can be in with that flow. Most people, when they try and learn Elliott Wave, is because they think, it's going to tell them, here's wave 1, here's wave 2, here's wave 3, here's wave 4, here's wave 5. And then they think they can get in and out with pin mark precision. Sometimes you do. But it's definitely best understood as an understanding of the movement of price action and where it's likely headed. And you can use other techniques, more locally to kind of figure out, unless you want to zoom in and really follow the 5-minute count to figure out where exactly it might be topping out or bottoming out or whatever. Yeah. So in any case, so real quick here, this is the NASDAQ. Excuse me, geez, whiz. NASDAQ's interesting. Excuse me, we may be topped out. If I come off the top here, I've got 5 waves up here. It looks like we got a leading diagonal right here, so maybe a 1 with a very little 2, 3, 4, 5. And then that's an A, B, C hitting the 50% retracement, almost filling in the gap. And then we might see a drop down further below this level. If it does, then we've got potentially a 1, a 2, and a 3 coming down. But until we get below this wave 4 down here at 12,397 and 5 cents, it's possible this could be something else playing out. Now, if this is a 1 and a 2, as we have it here, and maybe you go, okay, this is a 1, 2, 3, 4, 5. So either this is a 3 or this is a 3, and then this is a 4 playing out, or maybe you read this differently here and you get an ABC down and a WXY up or something. WXY up or something. And so then you have a flat correction happening here and 5 down, so A, B, C. Well, the problem with this is 4 now, even though you could probably get a valid flat correction out of that, wave 4 is down well into wave 1. And so at that point, what that would mean is either that would have to be, because you can get 5 waves up. So either this would have to be a leading diagonal wave 1 of wave 5, or your count is off and this count is correct, wave 5 is done, we're heading down. Because in order for this to be an ending diagonal, for this to end to 5, or this, 3, 4, and then 5 to end, these have to be ABCs for 1, 2, 3, 4, and 5. They all have to be ABCs if it's an ending diagonal. And I guess it's possible. But that's what you would have to look at. That's the way you would kind of look at that. But even if this was, let's say you can get an ABC out of 1, 2, 3, 4, and then 5 here, well, then in that case, you still mean you only have this one more up here a bit. But until it gets above that all-time high, my bias is going to be watching it for some potential further downside on that. And then if it doesn't get to a new all-time high, we're going to see disagreement between it and the other indexes that we track, the Dow and the S&P, which have made new all-time highs. And as I've talked about before, that's not necessarily a problem, because often when you have a more macro change in the market, you're going to get that non-confirmation between indexes. So that may be what we're seeing setting up here. So yeah. So yeah, again, just watching that, we could have that non-confirmation between the NASDAQ and the Dow Jones and S&P, which just kind of tells you, hey, macro reversal right in there. But we'll have to see how it does. We'll have to see how it plays out, though. Anytime, oh yeah, there's always a point in looking at something that makes all-time high. Sure, why wouldn't you? If you're going to be in the market, you'd be silly not to, right? Let me see here. So, well, that didn't work out well. What the heck just happened there? What's going on in my Discord? Oh, you know what? Oh, because I'm hitting the wrong one. It's been a long day, guys. It's been a long past few months with everything that's going on. Here's my S&P. I've got us coming off here. Now, there's a couple ways you can look at this potentially being 3 and this being 4 going up. Or you can look at this being 3, this being 4, and this is a 1, 2. Look at this larger move up. If you want to think that this is a 3 and this is a 4 here, ABC, then what you have here is a 1, 2. 3 should be in or just about in. 1, 2, 3, 4, 5. And you get back 4, and then you get a 5 probably up here around 42.50. And that might do it. That might be it. If this is 3 up here and this is 4 down here, that gives you a 1, 2, 3, 4, and 5. And if you can do that, then that's likely to keep the NASDAQ below the all-time high. And again, give you that non-agreement there with it. So yeah. I need to renew my membership. No kidding, right? No kidding. If you want to look at the Dow Jones here real quick, I got to get going, guys. But one last thing here. Dow Jones, again, like I said, new all-time high. Pretty similar to what we'd be looking at on the S&P. If we figured that's a 3 and that's a 4 at the bottom, and we're moving up, it's the same count. 1, 2, finishing off a 3, we'll pull back for a 4, and then we'll have a high, a 5 up there, maybe around 35,000. And again, there's enough room in that to potentially allow that non-confirmation to come through with that. So that's where I'm kind of looking at that, and on these time frames, you can see the Stochk RSI and RSI are all high and whatever. So, nearing some kind of top coming out, I think bigger top, but we'll see, right? We'll see. Again, I've got my thoughts, on larger macro things, guys, but there is no time limit on that, Again, we're talking about a 230 some odd year cycle. Takes longer, a lot of stuff to, to flush out of the system. But even doing that doesn't mean that you don't trade along the way. And that's where I get a lot of the nonsense comments on Twitter. Because somebody say, oh yeah, you've been talking about that for 6 months or something. Well, yeah, we've been talking about it, just nothing, it hasn't happened yet. It's still working itself out. So we're making note of all these other indicators and things that are just going haywire and going crazy, kind of shouting at us, listen, this is unsustainable. But until it does, you can continue to play up. And I think that's where a lot of people get it wrong. They look at what I say on Twitter and they're like, oh, he doesn't know what he's talking about. He's not making any money. But then you join Twitter, then you join Discord, you go, holy crud, okay. Lots of money being made here. Lots of money being made. Because, again, your larger macro thoughts don't mean you stop doing what you're doing on your micro, on your daily. It just gives you something to look at, a larger picture that may or may not happen. As long as the trend continues up, though, you keep playing the trend. Yes, you can mark where there's possible tops along the way, but if you don't get confirmation of those tops, you continue higher. That's why I always give our Discord members, targets. I say, listen, here's what this may be, a possible top here. But if it does this then and goes here, then it's not, and we'll continue up to this area. It's not as simple. I don't ever get in there and go, listen, that's it. That's all there is. I've never done that. I've never said sell everything you have. I've never said sell anything you have. I don't think I've ever said that at all. I've always said, listen, there's a possibility it might be there, but if this happens and it does this, then no. It's invalidated, it continues higher. So, you're up 35K there on Doge, the Black Man's Guide to Bitcoin. Man, I love hearing that. Make sure you don't lose it when it's all said and done, okay? Make sure you don't lose it. Most of the people you guys are seeing online or that you're talking to online will lose all their money they've made and more because they'll try and put more money in to make up for it. This happens every bull market, guys. At the end of every bull market, in every market. Okay, crypto's no different. Forex is no different. Equity's no different. Commodities no different. Retail tends to FOMO in late, and they think it's going to go up forever, and then they don't get out when they need to lock in their profits, and then they lose it, and then they're, rightfully frustrated. But usually not at themselves. Usually they swear it's everybody else's fault. You guys just got to be careful out there, okay? Bronco, what's going on? You can jump over here at howtotradetowin.com right here. And you can get in there with us. And, tier 3 is where you get access to absolutely everything. 80 plus hours of education. We've got 2 tier 3 live streams every week, education live streams. We're about to have a third one here in the next couple of weeks. But one of them is just a general tips, tricks, and techniques. Get you trading, even if you've never traded a day in your life. Because we show you a technique that gives you the rules. This is where you enter. This is where you exit. This is where you stop loss. You take profit or whatever. The other one is Elliott Wave. Every week we look at Elliott Wave. And then the one we're going to be starting here in another couple of weeks is going to be Wyckoff method. For those of you that don't know me, the basis of everything I do is price action and volume. And it leans heavily toward Wyckoff and, of course, Elliott Wave. But other than that, I've got a few tricks up my sleeve that I've learned over 25 years that make it all a lot more fun even. So I do that. I share my knowledge with all you guys with that. So you can't believe Charlie Munger is older than Betty White? I won't be able to believe it if he outlives her. That's what I won't be able to believe. She's going to outlive him by at least 10%. Chemo says it's funny how once you actually learn real trading, how much everything you say, I say, makes so much more sense. Yeah. It's hard though at first. If you're a new trader, you listen to what I say and you're going to argue a lot in your head, or you're yelling at the computer, or you're laughing at me, or you're whatever. But you hang around long enough and you go, oh, yeah. Just is what it is, guys. Right? All right, guys. Hey, listen, I got to get out of here. Yeah, hit the like, share the links if you get a chance. If you liked it, guys, come on back. That's what this is. Every week, on Tuesdays and Fridays at 11 a.m. Central Standard Time. This is what we do, all right? So I'd love for you to join us. But if you really want if you really want to get into my head, you join us at howtotradetowin.com. You'll get in there and you'll find out this is not as much fun as you thought it was. Not really. It's fun. It's full of a lot of trading knowledge, a lot of trading experience, and a lot of answers to things you probably aren't getting to clearly anywhere else. So we'd love to have you here, but as always, if not, hopefully you guys will join us again next Tuesday at 11 a.m. Central Standard Time, all right? You guys have a great weekend. Y'all trade safe. Spend some time away from the charts. Spend some time with family, not looking at your phones. At the end of the day, guys, if you're trading and that's all you're doing, then you're doing it wrong. Trading should enable you to have a more fulfilling, better life. And that, because we are humans, includes being around other people, our loved ones especially, all right? All right, guys, y'all have a great weekend. Take care. And remember, the only thing you control in the market is how much you lose. That's it. Risk management is where you make your money. It is the single most important thing you can do to yourself that have the largest effect on your overall profitability long term, all right? Have a great weekend, everybody. Take care.